Stop the presses. Mortgage rates just hit a massive low. I'm talking about the cheapest rates you have seen in over a year. If you are waiting for a sign to jump into the housing market, this is it. But here is the crazy part. Most Americans are still sitting on the sidelines, waiting for even more free money. Right now, the average rate for a 30-year fixed mortgage is sitting right around 6%. Think about that. For over a year, rates have been chilling above 6%. Now we finally broke through. This drop is huge. It's actually the third week in a row that rates have fallen. Just last week, we were up at around 6.3%. We have seen this rate drop nearly a full percentage point since the start of this year, when the 30-year fixed mortgage was crushing buyers at over 7%. A year ago, rates were around 6.5%, so getting 6% now, that is a deal people are starting to look at. And it gets better for smaller loans. The average rate for a 15-year mortgage also fell, hitting about 5.5%. If you can afford that shorter payment schedule, you are scoring a seriously good deal. So, what does this actually mean for your wallet? It means you can afford more house without going broke every month. Take a look at the typical household with a monthly housing budget of $3,000. Because rates dropped, that $3,000 budget now buys you about $26,000 more house than it would have bought you just a year ago. You are buying a bigger house or maybe a house in a better area for the exact same monthly payment. That is real money saved. The typical mortgage payment is barely moving up compared to last year. It has only increased by about half of 1% over the last year. That is the smallest increase we've seen in months, proving these falling rates are directly helping people afford those crazy high home prices. But here is where the story gets weird. Even though rates are dropping and buying power is up, Americans are still refusing to buy houses. Last week, applications for a new mortgage to purchase a home dropped 5%. Overall, pending home sales actually slipped last month, marking the third week in a row of decline. Demand for homes has been weak for 3 years now. We're talking about demand scraping along at historic lows. Purchase applications are down 35% compared to the same time just a few years ago. Why the heck is everyone waiting? It comes down to three things, and they are all fighting each other in the market right now. First, prices are still too high. Nationally, the median home sale price is up about 2% from last year. Even though rates are easing the pressure, homes are still expensive. Second, economic anxiety. The same global tensions and economic uncertainty that are pushing mortgage rates down are making people nervous about signing up for a 30-year debt sentence. People are cautious about making massive long-term commitments. Third, the waiting game. Buyers are watching rates drop, and they are listening to all the noise out there saying rates will fall even further. So they sit on their hands, waiting for the perfect moment. We are in a standoff right now. Sellers are pricing their houses like it is still a raging seller's market, but buyers are saying no thanks. They are willing to wait for rates and prices to drop before they jump in. The fear of getting ripped off or fear of getting screwed by committing to a higher rate now when rates might plummet later is a huge factor. Why buy today if you think you will be able to get a cheaper loan tomorrow? But trying to time this market is a fool's game. Real estate agents across the country are saying that it feels like the market is finally tilting toward the buyers. Sellers are starting to realize they can't be so picky anymore. Many agents are reporting that the majority of sellers are slashing their asking prices. Almost 90% of agents have seen at least one seller reduce their price. That is massive. And if you are willing to look at new construction, builders are practically begging you to buy. They're desperate to clear inventory. We are seeing builders offering crazy incentives, like dropping the rate for the first few years down to less than 4%. They're throwing in free appliances and handing out concessions worth up to $20,000. That's free money. One agent reported that an all-cash buyer scored a condo appraised at $685,000 for only $500,000, and the seller even paid 6 months of the association fees up front. Deals are happening if you are ready to move. If you have cash or if you are willing to use a little trick, you are winning right now. Some buyers are getting creative just to afford the monthly payment. We are seeing a huge jump in people borrowing money from friends or family just to make the down payment. And a lot of people are using adjustable rate mortgages, or ARMs. These loans give you a much lower interest rate at the beginning, usually for the first few years. ARMs are now making up about 11% of all mortgage applications. People are betting that rates will drop and they will be able to refi into a lower fixed rate before the ARM rate adjusts higher later on. It's a risk, but it gets them into a house right now. Now, let's talk about the Federal Reserve, because they are the puppet master behind all of this. The Fed cut its main rate last month, and they've basically told us they plan to cut it 2 more times this year and then another time next year. This expected action is why rates are falling. Investors look at what the Fed is expected to do, and they price that into the market right now. But here is the most important lesson you need to learn about mortgages. The Fed's actions do not guarantee lower mortgage rates. The Fed controls short-term stuff like credit card rates and bank accounts. Mortgage rates, the long-term stuff, follow the bond market, specifically the 10-year Treasury yield, which is sitting around 4% right now. We have seen this movie before. Last year, the Fed cut its rate multiple times. Guess what happened to mortgage rates? They shot up over 1% after those cuts, peaking at over 7% earlier this year. So if you are sitting around waiting for the Fed's next rate cut to magically deliver a 3% mortgage, you might be waiting forever. And while you wait, the perfect house might be gone. If you are financially ready, you should lock in this 6% right now. If rates fall to 5% later, you can always refi. You can't rewind time to grab the house you missed out on. But while buyers are stuck in the waiting room, current homeowners are having a party. Refinancing activity is exploding. Refi applications shot up 4% last week. That's huge. Compared to a year ago, demand for refis is up by over 80%. Homeowners are rushing to lock in these lower rates. Refinancing loans now make up over half of all mortgage activity. This high volume shows that people who bought houses in the last year or two, when rates were over 6%, are desperate to save money on their monthly payment. For most Americans with a mortgage, however, this 6% rate is still too high. Why? Because 80% of current American homeowners have a mortgage rate below 6%. Over half of all homeowners have a mortgage rate below 4%. So until rates drop below 6%, we're only going to see a limited number of recent buyers taking advantage of this refi boom. But for those who bought when rates were high, this is your golden ticket. Let's look at the big picture. New listings are up about 5% from a year ago. Sellers are putting their houses on the market, hoping buyers will finally bite now that rates are lower. Nationally, there are 500,000 more homes for sale than there are active buyers. That's leverage for you, the buyer. In some cities, prices are still surging. Cleveland saw a massive 12% jump in price. Detroit, Newark, and San Francisco are also seeing big price gains. But in other spots, prices are clearly falling. Dallas saw prices drop over 5%. Jacksonville, Fort Lauderdale, and Miami are all seeing prices decline. The housing market is balancing out. The craziness is gone. The ability to negotiate is back. The median time a house sits on the market is 48 days, which is 6 days longer than last year. Things are slowing down. Competition is cooling off. If you have a solid job and your finances are in check, now is the time to make a move. You are getting the lowest rate in over a year, and you finally have leverage over sellers who are now forced to make deals. Don't wait for the mythical 3% rate. It might never come. Lock in the 6% rate now, get the lower price on the house, and refi later. It's a buyer's window opening up, but you have to be ready to run through it. Don't forget to like this video, hit that subscribe button so you don't miss any of my simple financial breakdowns, and ring that notification bell so you know exactly when I drop the next bomb of truth. Catch you later.